Okay. All right. I think we're good to go. And you guys can hear me okay. If you can, in voice chat, text, you can just say, I can hear you, or let me know. Basically, today we're going to be covering what I call Portfolio Management 101. And this is specifically related to cryptocurrency, in case anyone is finding this and thinking it has anything else to do. Traditional stocks, commodities, securities. I don't know shit about them. So this is not for you. We're going to cover a few different areas, mainly portfolio construction, obviously, some risk reward stuff, how much, quantity of investment, fund management styles, what to invest in, various areas, how to acquire and or invest, because we have mining as an option in cryptocurrency. And then also, very important, when to take profits or cut losses. So that's kind of what we're going to be covering today. It should be relatively quick, but if something comes up, we'll go into that. So the first thing I want to talk about is your portfolio construction. So this is a matter of personal preference. It's a matter of capital going in that you can invest relative to your responsibilities in life, current financial obligations, discretionary income, money that you don't need to survive, percentage of that. So there's no like blanket answer that I can say, okay, this is what everyone should do. I went a fairly traditional route when initially investing in 2013. I picked up about $400, $500 worth of Bitcoin. That to me at the time was about 15% of my monthly paycheck. So it wasn't a small amount at the time for me. And it was highly speculative. And that would be considered, a relatively risky trade. It's a speculative thing that is worth not a lot of anything. It seems volatile. It could be something. It could not be. Putting that much aside, it was money I was prepared to lose, but truthfully, it was a chunk. It wasn't nothing. That's not nothing, especially when you're living in New York. So it's really important to consider all of the factors that you have going on when you're thinking about investing and constructing a portfolio. I can also see that I see that the Discord server is getting a little choppy. Hopefully this is fine on the YouTube. Yeah, it is. So if you want to go to YouTube, let me just type for the people in the Discord so they know. Go to YouTube if it's breaking up in Discord. Okay. So back to the portfolio construction. So like I was saying, it's really important to consider all of the factors that are going on in your life, and no one knows the future, of course. If we did, we would just say invest in this and then you'll be set financially forever. But we can make educated guesses. But when it comes to managing your personal finances or business finances or however you're investing, keep all of those things in mind. So then that initially, immediately leads us to risk versus reward. So how much are you willing to risk? How risky is the proposition, and what are the rewards? Potential rewards, I should say. One of the reasons people have gravitated to this space is because there's what we like to call asymmetrical bets. So with Discord people, I probably got you back right now. So asymmetrical bets mean that Discord, come on. Asymmetrical bet basically means you have a lower risk in terms of exposure. So the amount you're wagering is significantly geared towards having higher rewards. So you could say something like the lottery. Is that an asymmetrical bet? Kinda, but not really. Your chances of actually winning the lottery are pretty slim. The chances of some cryptocurrency like Bitcoin actually gaining value due to fundamentals is a better bet to me. So when you can find these asymmetrical bets, it's not a bad thing. And that is where risk and reward comes in. So for me, this also comes into play when you're building your portfolio of Bitcoin, altcoins, and trying to figure out what percentage of which you should be holding at any given time. Now, I, weirdly enough, consider myself almost a Bitcoin maximalist in the sense that I believe Bitcoin, if you were, for anyone just looking at the cryptocurrency space, probably one of the safest things you could do is regularly put in 50, 100, whatever you can afford on a monthly or weekly basis into Bitcoin right now, and continue to do that. And I think in a year, 2 years, 3 years, over time, that will prove to be a wonderful investment. So Bitcoin to me is, and we're not going to go into the whole Bitcoin thing today. There's plenty of reasons I believe that, and we will go, and maybe we can go into Bitcoin maximalism, but it's a very safe bet, relatively speaking. Now, if you ask someone outside of the cryptocurrency world, is Bitcoin a safe bet? They're going to be like, hell no. This is one of the most risky things you could ever invest in. It's volatile. It goes up and down. It's backed by nothing, blah, 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 blah. It's a Ponzi scheme, pyramid scheme, whatever you want to call it. So it's all a matter of perspective at the end of the day. That's important to point out. But in terms of cryptocurrency, Bitcoin to me is a very safe investment. When things get rocky, if I'm not pulling into fiat, which I don't do very often unless I need it because of taxes, right? I don't want to continuously pull out money, especially large chunks of it, and have to pay a big tax hit on capital gains and just as income. So that's important to remember as well with some of this stuff. So I usually kick stuff into Bitcoin, and I'll just sit there happily if the market's doing what it's doing now, which is kind of choppy, sideways, up, a little down, nothing crazy. People are a little freaked out. I'll just chill in Bitcoin. So that is what I would consider a safe or less risky play. Now, in terms, like I said, of the grand scheme of investing, Bitcoin is probably considered a riskier play, but the asymmetry of the gamble, I guess you could say, or the play on Bitcoin is sufficient for me to be like, okay, this is good. And I've also experienced it, seeing it go up tremendously in 5 years, 4 years. So that's important to just mention about risk reward related to specific cryptocurrencies. So now when we're talking about building and why I said it was interesting is 70, 80% of my portfolio, probably more at this point, 90% of my portfolio at this point is not Bitcoin, right? So we can get into that a little bit, but this is the grand exception, and will come into portfolio construction. So I'll justify that by saying I think you should get Bitcoin, and then saying, 80, 90% of my portfolio isn't Bitcoin. What is most of my portfolio? It's VE Chain, and we'll get into that, and I've covered VE Chain a ton in other things. It's one of the few cryptocurrencies that I actually think that it's not tethered to the price of Bitcoin, but has a real good shot of demonstrating real world use case for enterprise level solutions and the supply chain management and a lot of other things that people aren't totally comprehending in terms of the economic system they're setting up. So that's why I found one particular thing, and I'll use a personal example to describe, portfolio construction. I found one particular coin that I am very confident that it's undervalued over time, expanding out to years, half years. So I've put most of my funds into that. That's a pretty risky play based on traditional investing. If someone were to look at, where my funds are at this point, a traditional financial advisor, they'd be like, holy crap, you're way too overexposed. First of all, the majority of your money that you have that's theoretically liquid, they would say theoretically because it's Bitcoin and other things, crypto, is in stuff that is highly volatile. That's not what you're supposed to do. Furthermore, you're in something that is susceptible to price swings related to Bitcoin, so you're totally overexposed. Yeah, maybe. I personally don't believe so because most of my net worth in cryptocurrency was built up from a significantly smaller amount. So for me to hit a kind of devastating, catastrophic loss point, shit would have to go so incredibly wrong, so incredibly quickly. And seeing the stability of the cryptosphere in the past year, even 2 years, is really gives me the full confidence that won't happen. So it's a matter, again, of personal preference, where your risk is going to be, how, exposed you are, so to speak, to volatility in the market. And this leads us to, how much should you be investing? And this is directly and intrinsically tied to your fund management style. So I typically recommend for people who have little to no experience in cryptocurrency to start very small, unless money just is not a big concern of yours and you can plunk down 10 grand or more, I would recommend people scale up, you don't have to go big. There's no rule. You don't have to buy a full Bitcoin. You don't have to buy half a Bitcoin. Buy 0.01 Bitcoin to start, whatever price it's at, if that's reasonable for you. So how much to invest is really related, again, to your risk reward, your portfolio construction in terms of not how much you're going to invest, your fund management style. So let's talk about the 3 fund management styles that I've identified in speaking with dozens of people over the past 6 months, clients and people in here. So the main type of investor I encounter, because I've kind of geared my business and consulting business towards this, is the sit back and relax type of investor. This is someone who wants to put their money in something that's undervalued. If it goes down, no big deal. Maybe you get some more, but not going to worry about selling. Wake me up when it's up, and that type of person will typically have some clear gains in mind. Obviously, they want it to go up 50%, 100%, whatever it is. Sit back and relax. That's probably where most people should be, just to be clear. The second type is what I call the quasi or the pseudo trader. And that's not meant in a pejorative term. It's actually a good thing. This is someone who trades maybe a few times a month, or maybe when they find something that's a really good deal, or they have a hot tip or whatever it is. But really, they're not checking in every day. They're not totally obsessed with the crypto market. And I know this is hard to do when you initially get into it, to not be obsessed if you're really into it. But they're kind of confident and they have to make a few moves, but really they're just trimming the hedges. They're not ripping up plants and putting in new things every day. So that is where I have found myself falling into. Now, there are many other aspects of cryptocurrency that aren't just related to portfolio management, like doing research and mining, all of these other things that are incredibly, they can be time consuming, but we're just going to be talking about building a portfolio. Then the third fund management style would be the active trader. So the active trader is someone who's really tuned into the markets, making maybe several intraday trades, certainly making dozens of trades a month. This is their job, right? They're devoting 40 hours plus a week to trading and investing and building their portfolio. Very small percentage of people should be this. Now, granted, you don't have to be a broker anymore, to invest in these types of things, but that is not the life for most people. As glamorous as it may seem, I can tell you from having given it a shot for 2-3 months, from about December to March, did well, but not something necessarily that I think is a very worthy use of time for most people. So I probably fall into the quasi trader and the sit back and relax camps. Now, I add to that, like I said, by doing research on things like spec mining, low cap coins, just things that are interesting that are out there, but I'm not trading as much anymore at all. So then let's talk about, you figured out your fund management style, you kind of have sense, you play around with it. You don't really know these things also until you start investing and or trading. So, good luck. If you have a really clear sense of who you are and what you're doing, that's great, but it takes some trial and error in my experience. So what to invest in? There's so many possible things and avenues. I'm not going to be able to cover them all, but there are digital currencies like Bitcoin. There are platforms like Ethereum, EOS, if that actually exists, dozens of other. There are tokens. There are tokenized securities like Ravencoin. There are utility tokens, which is what VeChain Thor will be. There are privacy coins, interoperability coins. There's gaming coins, cloud storage. There's endless amounts of things to look in, but some general themes that people like to break them down are, privacy, currencies, platforms, interop, stuff like that. And you can go down and do research on all of those or some of them and get what you think is a good bet. This is kind of like saying, hey, I think Tesla is a good company to invest in because in 10 years or 5 years, Tesla is really going to be great. It's going to be like the Apple of cars. No real difference than that. I mean, the beauty of cryptocurrency is you have so many intangibles that you can look at and so many ways to research these things and get really embedded into the community. Research becomes your best friend, which is why you'll see most of the successful traders or investors or people who are in the scene really are plugged into some pretty cool communities. Okay, so let's talk about portfolio. You have some idea of, how much, what your style is. your risk reward, and potentially what to invest in. How do you acquire them? So there's a bunch of ways. The easiest way is probably by going through an exchange, either a fiat to crypto gateway or a crypto to crypto gateway. There's a bunch of those, and we've covered them in other talks. So you can go through exchanges. There are also initial coin offerings, which is somewhat restricted for United States people, but in other countries and nations, it's a little easier to do. So those are initial coin investments akin to like an IPO, an initial public offering. Money is raised before they're publicly listed. You want to be careful with some of those. A lot of them have pre-sales or pre-mines before the ICO actually happens. So you just want to be very well versed in what you're actually purchasing and getting into. Like I said, there are also private sales. I just recently did one of these where you get, a tip, or someone knows something about a private sale before something's going out, before ICO, or maybe there is no ICO. You can get in, send me this many Ether, you get this many tokens back. All right. So there are also funds where people will go in together and say, hey, we're going to invest in X, Y, and Z. So, there are some of these. Again, I'm not in any, I don't run any, but this exists. You can also mine a lot of these coins. You can stake these coins as well. So there's spec mining, there's GPU mining, there's ASIC mining, there are mining pools. We're not going to go into mining. I'm slowly starting to get into spec mining, which is speculative mining. So I'll have a talk on that that's separate. But, I want to point out that, you don't just have to buy these things. Yes, there are costs associated with mining, and you can rent miners virtually. But there are other ways to accumulate coins. So that's important to factor in when you're building your portfolio. You may want to have different revenue streams, just as you would maybe in a traditional investment. Again, I'm not a traditional investor, but a mutual fund where you have different kind of low risk, low yielding, kind of regular return stocks and commodities or real estate or whatever it is. And then maybe you have some riskier ones. So a lot of people, for me, I'll give you a breakdown of my portfolio. 90% of my portfolio is what I would consider off the grid, cold storage. It is not on an exchange. It's easily accessible if I need to, but I do not really touch it at all. I've broken that rule a little bit with some of my spare Bitcoin and, different various alt seasons. But for the most part, 90% of what I have is not to be touched. So that means the rest, the 10%, is either traded or cashed out. That's how I do it. That's not saying that's a hard and fast rule, that it's the only thing that you should be doing, but that is what I do. So again, a lot of this is figuring out exactly what works for you, and a lot of that is trial and error. So often in consulting sessions, this is the first things I'll cover. It's like, well, we want a clear strategy for getting principal out. You want to have an amount, potentially a time frame, that you take your principal out, meaning the initial amount that you invested is out. So it's house money after that. That's really important. So this is a conversation that's, again, related to how long do you hold this stuff? When are you supposed to take profits? Or conversely, when are you supposed to take losses? Again, we've covered this in other talks. I think establishing goals and plans about when you plan to cash out, how much of this is intended to be passive income, if there's staking or something like that, is really, really important. You don't want to just let this ride forever. Yeah, you might want to let most of it ride for a really long time, but have a plan. You'll feel a lot. Let me say this. There is a direct correlation between really freaking out and not having cashed out at all. So when the market goes down or sideways, the people who have been through a few of these dips now, maybe took a little bit of money out when they were up some, feel a little bit better when things are going down. When something just comes out of the blue and everything crashes and you've not taken anything out, you don't feel so good, and that can lead to panic selling. So that's really important to have a plan. You don't have to necessarily stick to it 100%, but have some semblance of a plan before you go in. So yeah, that's kind of a basic 101 of portfolio management. That's a weird way to say that word. If there are any questions in the Discord server before I go, you can put them in voice chat text and I'll get to those. Otherwise, we'll call this one a wrap. And then I'm also going to be looking into Twitch as a potential streaming service. It's a little more interactive, and I think it's about as easy as what I'm doing now with OBS. So we'll do that. We're good in the Discord, guys. You guys could hear me okay? I know it chopped out at 1 second. If we're good to go, I'll stop streaming on YouTube. All right. I'll see YouTubers later.